This is a Forex blog for September 26, 2011, and like most days, we really want to buy the strongest currencies versus the weakest. We have each individual currency compared to all the other currencies on multiple time frames using multiple different tools. This top histogram is composed of 5 different statistical tools. 3 of them measure the direction, in this case the dollar, and 1 of them measures the intermediate time frame intensity of that direction. And the last one measures the intensity on a bar by bar basis. And so instead of looking at 3 to 5 different indicators, you can look at one and it averages them all together with different weights. I think 40 to 50% of this weight is based on intensity, and 50% of the weight, or 60%, is based on the direction. So anytime you get a level at and above the dotted 80 level, it's not only telling you that the majority of dollar pairs, 80% or more, is going up, but they're also going up with above average, and in some cases extreme intensity, and those trends are likely to continue. Underneath that, we have the intermediate time frame trend, which is based on multiple different time frames and tools as well. It's anywhere from 30 minutes to 2 hours of trend direction. And then underneath that, we have the daily, weekly, monthly. So anytime the dollar is super strong, intermediate strong, daily, weekly, monthly strong, or in this case the yen, you want to buy those currencies against the weakest ones. Now, across all the time frames last night, the Australian was the weakest, the New Zealand, the CAD looked pretty weak. Let's scroll this back and see. Coming up to midnight, it wasn't quite as weak as it appears right at midnight. The Australian was. So you would have wanted to sell the Australian dollar and Australian yen right before midnight. As long as these remain strong up until about 3 and about 3:30 for the yen. Then they had a couple hours of weakness. But because the longer term trend is up, once you see that weakness kind of subsiding, it's pretty safe to assume after 3 to 5 hours of weakness that the longer term weekly, monthly trend will resume itself. So here's the Australian yen, and you can see coming up to midnight, it was above the hourly and broke down underneath it. And you have, a nice little sell here, about 20 pips of profit, probably a 10 pip loss here. And then the last one, you're short here at 39, and it got you out all the way down here at 57. So huge 70 pip profit towards the end. Notice from about 3 to 7, the dollar's weakness caused the Australian, or this is actually the yen. The yen from 330 became weak, and that caused the Australian yen to go up. Here's the Australian dollar. Same thing happened. Weak Australian, strong dollar. It started falling here last night, fell again here, you would have lost 10 pips, fell again here, you would have made about 20. Short here, probably made 10. Short here at 21, out at 40 for a nice 80 pip move at the end. And again, when the dollar was weak and the Australian lost its weakness, it did this counter trend move. Once you see a double top at the outer containment bands, usually the market's going to reverse, and you can see that the intensity is half of what it was at the first peak, and then it came flying back down again, over 125 pips down. When the longer term weekly, monthly trend are down, it's much safer to short at the upper bands, and you can also short Fibonacci profit targets of the last wave. As you can see, it went to the 1.318, hit a weekly pivot level, it looks like right here, and the market, double top there and collapsed. As you can also see, the New Zealand was also weak last night, then it had a bit of strength. So the New Zealand yen would have been the best one because the yen was weaker. And you can see quite a few drops of 25 to 50 pips. When the yen became weak, it had a counter trend move. As you can also see right at the upper containment band, trading zone level, very likely to be the high. Major selling at these trading zones. Here's the New Zealand dollar, same thing. This currency is underneath the hourly, which means it's much more likely to go down. You get short right here, and you can see it kept you all the way until about right here. You never really want to short underneath the lower containment band, so it's best usually to avoid any sells underneath it, because usually the market does violently reverse. The euro really didn't have any, the monthly trend slightly down, the weekly trend slightly up. For the most part, the moves were more intensely to the upside than to the downside. You can see peaks of green bars at 80, with the red bars half of that. So you certainly could trade the euro against either the Australian or the New Zealand earlier. The pound also was quite strong. You could have traded the pound Australian, buying it, pound New Zealand, buying it. This is not one of the currencies that we normally watch, but let's take a look at this one. Currency meter usually is very fast and accurate in identifying the best opportunities and the ones that are most likely to continue going in that direction. So you can see, same exact thing as the yen and the dollar. The pound was strong and the Australian was weak, and it went up 250 pips. The pound New Zealand probably also went up 150, 200 pips from 99. So 100, 200, yeah, over 200 pips too. Now, later today, the pound at 8:30 was the strongest of all of them, and the dollar and the yen were weak. So you could have started by trading the pound yen by buying it, or pound dollar. A little bit after 9, they both became strong. So whatever the strongest of the two is going to cause the direction. If you're in a currency that looks good, pound is incredibly strong on all time frames. It was strong earlier. It's the strongest at the time. At 8:30, you can certainly, look for entries in the pound dollar and pound yen. But once you see the dollar resuming its strength, you got to be careful. Here's 8:30. The pound was strong and the yen and the dollar were weak, and you can see it broke out right here at 31 and went all the way up to 53, up 20 pips. And after 9 o'clock right here, you can see the dollar's strength came in. So, if you were still in that trade, the worst case scenario is you would have made 10 pips on the 21 or 22 pip move. Once it pulls back and the previous weakness comes back in, and the pound, is still resuming its strength, it's not bad to buy it again. Here's the pound yen. At least you had a half an hour period right here where you buy the breakout from 56, went all the way up to 83. So once again the yen started to get strong a few minutes after 9, here's a few minutes after 9, you get out of your trade. If you're, and you can see you clearly would have made money regardless. Use the currency meter. Now the pound was still strong, but it wasn't as strong as the much stronger dollar and yen. The New Zealand was weak before, and so was the Australian. So it's better to trade a strong currency against one that was more consistently weak earlier or had more intense weakness earlier. Here's the pound Australian coming up to 8:30. The pound started getting strong again, and you can see that it wasn't until 9 that the Australian started to show some weakness. Here's 9. And so if you didn't get into this trend right here, when it kind of went up and went sideways and bought this breakout right here, you can see even if you got into this 30 minutes late, it still went up 125 pips. Here's the pound New Zealand. 8:30. You had a big drop off. If you didn't get in it then, and you can see this one actually had no strength that the Australian did, and this was a much higher odds trade because there was no strength. The weakness came back in at 8 right here. It broke out to the upside, and this one, went up 150, 200 pips. The Swiss kind of mixed results, but the longer term trend was down. So, if you see some strength and then it kind of disappears, you see a little bit more weakness. From 4 o'clock, you could consider selling the Swiss because the weekly trend's slightly down, the monthly trend's very weak. Unfortunately, at 4, both the dollar and the yen didn't have that much strength. And at 4, some of the ones that did have the most strength, the longer term trend was also down. So it wasn't the highest odds trade, but the Australian Swiss and New Zealand Swiss would have been the best one, based on real-time momentum, to buy against the weak Swiss after 4. Here's the Australian Swiss after 4. You can see this broke out from 20, went up 60 pips. New Zealand Swiss, this one broke out here at 33 and went all the way up to the whole number up here, or the 50. Yeah, actually not too many pips in that one, 20, 30 pips. But the point is, the currency meter did predict the most likely direction. The easiest days is when you have one currency that's super strong on all time frames, another one that's weak, and it pretty much resumes all day long, and it just keeps going and going and going. Most days aren't like that. You might get one day a week that's like that. The rest of the days, you got to be a little bit picky in picking your choice of currencies. The CAD, you can see, is also for the most part, weak on all time frames. The monthly trend slightly up. I prefer the weekly. At 9, it became really weak. So you had a very high odds trade in the pound CAD. Here's 9 o'clock. You can see this went up another 100 pips. And it's a lot easier to trade these on range bars. So the pound CAD, you might want to use a 6 pips per bar chart. This has to download tick data. Sometimes when I leave it running over the weekend, it has trouble downloading new data on Monday. Yeah, here we go. Luckily it worked today. If you just bring it up, you never have those problems. And again, the CAD at 9 o'clock became pretty weak. Here's 9 o'clock, a breakout. And you can clearly see on the range bar charts patterns that you can kind of buy. This little flag pattern here, it went up 25 pips. You got a nice little pullback right here where you can go long with your stop just underneath the low. It kind of goes up and goes sideways, so you'd yank your stop from a pip to 3 pips underneath the low here, underneath this sideways range. And most of the time, strong trends will go and hit their Fibonacci profit target. So draw your Fibonacci profit target, and as you can see, it pretty much stopped on a dime right there. So you would have been in around 1.6 thousand out at 65 for a beautiful 65 pip risk while risking 10 pips. And that's really the only secret to trading. Small losses, big wins. And one of the new features we put in there Friday lets you see the next resistance and support area right in your quote sheet. So you can make even faster and better decisions and more mathematically sound decisions quicker.